Hello and welcome to another Forex Friday.
My man!
Let's just get straight into it. So I wanted to start off with a quick recap. I talked about this last week. This is the, it's kind of a different version of the DXY, a more accurate one, if you ask me.
Say what?
It is a trade-weighted version, whereas the DXY is basically entirely the euro and a little bit of the yen. It's like 55, 60% euro or something. So I just wanted to bring this up real quick to compare it to the DXY. I'm going to be spending most of the time, or at least when I'm talking about the dollar index, most of the time on the DXY specifically. But I wanted to just go a little back and forth just to see the differences. Because you can tell that the trade-rated one is still on an upward trajectory and still hasn't really hit that peak the way the DXY has. And again, that's mostly because the euro has been experiencing the most weakness. But in terms of like dollar shortage, which is like kind of a big macro trend right now, that's driving the dollar higher. That is still definitely on an upward trend despite this retracement in the euro. But with that said, let's just get into the DXY. So like I kind of mentioned, we already basically hit a perfect high, matched this previous one around 109.
That crazy.
Pretty wild. Almost like it was engineered. But I honestly expect at some point that we're going to push beyond that. I think the dollar strength is really... I shouldn't even say dollar strength. It's really other currency weakness, other fiat currency weakness. Because a lot of people point to the DXY going up as like, oh, the dollar's so strong. It's like, no, these other currencies are just that freaking weak.
Little bitch.
So I do expect the dollar to head higher in the coming months. Now it looks like we have, this wick is pretty wild. This is the daily chart. We had a pretty sizable push back up from this, from this dip into, let me dip down to a lower time frame. Actually, let's go even one lower. So this is the hourly. You can kind of tell, it's not exactly clear, but you had this impulse up here. It's minor consolidation before another impulse, and that's kind of where we dipped back into and had this sizable reaction, push us all the way up to the top of this channel. Now, I wouldn't be surprised if we saw the dollar retrace a little bit, or the dollar index at least, just because I think the euro, which I'll get to in just a sec, is potentially able to retrace a little bit, just because it's been so weak the last few, like week and a half or a few days, that I wouldn't be surprised if it's a little oversold, bounces back. I do expect it to go a lot lower. I think there is, it's tough to make a bullish case for the euro right now, just given everything going on. But yeah, so for that reason, I think that the dollar is going to be going higher, especially the dollar index. But in the meantime, in the interim, we could definitely see a return back to this level, possibly even back down toward this bottom level, or bottom zone right here I have around 106. And if you go back to the higher time frame, that's not super crazy. I think that would be a sizable retracement. I think that's probably the lowest it would end up going, maybe even around this level, call it 107. Just like a quick retracement down into this level, maybe hover and then back up. Now, I don't really trade the DXY, but obviously it's relevant for dollar pairs, really the euro. But yeah, so I'm not going to spend too much time on it. That's the gist of it. Dollar's super, look at this. This move has been crazy. So seeing a retracement is not, wouldn't be out of the question. It's not like if the dollar came all the way back down to here, it's, the bears are back in charge. Like, no, that's just a retracement after whatever this was. From trough to top, 5% move, 4.5% move, which is, that's crazy for a dollar. Obviously, we're not talking about a shit coin or anything. All right, so let's go ahead and talk about the euro now. All right, so like I said, let's go to the daily chart. Start from a higher time frame perspective.
Totally.
Okay, so now we had this peak right over here. I've talked about this before because we were in this range beforehand, and I was expecting the euro to pop out of that range, kind of this deviation, which is exactly what happened, and then went all the way down. Usually my target is just like the bottom of the range, but clearly we went way below that. Definitely broke parity in this previous low, right around here, basically almost at parity, a little lower. And now we are getting a little bit of retracement, which is totally expected. You can't go down forever.
That's what she said.
As much as we want them to. So it's probably going to retrace a little bit just because it's so oversold. I wouldn't be surprised if we kind of came back to this range to retest it a little bit, just to push back into this level around here before a continuation. Now, it doesn't mean I'm going to jump in right away. Not that that wouldn't be a bad idea necessarily, but I would want to see some sort of reaction. So I'd probably want to get a little bit more technical about the specific level. This isn't bad. You can maybe even refer to the candle close specifically. So you would want to see price come up here, maybe get above here with a wick, but you want to see candle closes below this line or below this line, and then you can maybe get in on a retest, or even just as soon as the candle close, not like a 1 minute candle close, obviously, so like a higher time frame, not necessarily a daily, but call it maybe like a 4-hour candle close below this level after clearing it. Then you could even just market, order in, short, and then target either this low, although I really do think that the euro could be headed a lot lower, maybe even to like the 95-cent range, or I mean, who knows? It's pretty crazy what's going on in Europe right now. And like I said earlier, it's hard to make a bullish case for the euro. So I think at best we could probably get a retracement up here. Maybe the midpoint. I would love to see it break these highs, and it kind of lines up with the midpoint of this previous range. So we get, actually, let me get rid of this nonsense. So a retracement back up here. I don't really see that happening. I think that would be challenging to see that much euro strength, unless it's just a lot of short covering because people are so short euro, and then, you know, whatever, something happens, we get a squeeze up to here. Possibly, I don't know. But if it did get this high, this is, I would say, ideal shorting territory, especially if it cleared this high, grab liquidity. So we clear this high right here. We just push up like that. And then, I mean, I would probably just enter. I wouldn't even worry about like waiting for some confirmation. I mean, not investment advice.
Totally.
But I would probably just enter right on a clearing here of here. Just pulling liquidity from this top, and then it's probably just going to crash right after that if I had to guess. So, yeah, and again, I don't see that really happening with the euro. I don't think it's going to get that much of a retracement after being oversold, even though it has been pretty aggressively oversold, as you can tell. I would be looking for probably like a retest of this area around here, and then I would just look for some confirmation that it's going to close below. You could even see if there's like a good weekly candle. Yeah, you can maybe even use this level right there, this green candle. So if it closes below that level, what is that? Like almost exactly at parity. Obviously, that's a huge psychological level. So there's a lot of reasons that people would be trading around that. Probably a lot of liquidity entering the market around there. But yeah, I mean, you can tell this wick too also perfectly reacted to that level. Let's get back down to 2 hour. Yeah, so we're in this slight uptrend, retracement. Hard to say how long it will last. We already kind of pulled liquidity from this area, but like I said, I still think it could come back into this region to retest it one more time, probably clear this high, grab more liquidity. So ultimately, this is the range I'd be looking for the euro, and then waiting for some sort of confirmation or candle closes below any of these key levels, and then just hop in for the short with, stop loss, invalidation level pretty clear. Like wherever the high ends up being, you just have your stop just beyond it. You enter right maybe on like a retest of that zone when the candle closes below, and then you target the, any level you want. I think targeting this level would be fine. It lines up with here, but realistically, I think the euro would be headed much lower.
Yep.
All right, next pair. So got to talk about USD JPY. Let's get to the daily chart. Come on. Okay, so can't deny we are in an uptrend. No reason to fight it until we see some clear signs that this thing is headed lower. So we bounced off of this level pretty well. This is definitely the level to watch, because this would be the higher high that we want to see to confirm that we're in this upward structure. I don't think I have it's the wrong one. Whoops. Got my templates. There we go. So this is the level we want to watch, because that would kind of confirm that we are maintaining the structure, because we have you know, a high, a low, a higher low, and then a higher high would be above this level somewhere. So this would be the target anywhere. I mean, obviously not anything specific, wherever the higher high ends up being, as long as it's above this level, that is consistent. And then we would be looking for some sort of pullback into demand for again, a continuation to make another higher high. Because don't fight the trend. Currencies especially, they tend to trend pretty aggressively. You know, they're long-lasting trends. So you identify the longer-term trend and you don't fight it until it becomes pretty clear. Like maybe if we broke below, I mean, I guess you could say broke below this low, maybe, but even realistically, this low, that would be like a higher time frame break of structure, where then you can start looking for sells into supply zones. But until then, we are looking for buys. I mean, you can do counter trend trades, but you know, your base case should be going long, realistically. And again, not investment advice. So, if we see USD JPY break above this high, again, that confirms that this bullish structure is still intact, and then we want to look for a pullback. I am eyeing something around here, potentially. That's a pretty big retracement, so hard to say if that's going to happen. Might depend on how price action develops, because right now you can see we're in this kind of consolidation right now. So if we see a big green candle that pushes above here, this would be potentially a really good area of demand for it to pull back to in the future. Really depends on any imbalance that forms. Let me get rid of this. Oh, got rid of all of it totally. So we got this level right here that looks like it could be a future area of demand, especially if we see price kind of continue to consolidate here and then push higher and leave some sort of imbalance like in this region right here. So price pushes higher, makes that higher high, and then retraces into this demand level and then continues higher. So hard to say where that will be now, because we still got to wait for price action to develop. But that is what I'd be looking for. And this level too, but I don't think that could be a pretty sizable retracement. Now, in the meantime, that could be a good potential buy, just given where we are right now. We could easily see a retracement down to here, in which case you could long up to this higher high. I don't think that's a terrible trade, but I don't know. I probably won't be taking it just because I want to wait to see if it confirms this structure by making that higher high, and then I'll wait for that pullback into whatever demand level I see. But yeah, that is Euro USD.
My man.
Or USD JPY.
You're a fucking idiot.
Matter. All right, next pair. All right, so what do we got? This is Swiss franc and yen. Now, why did I include this? Let's see. I'll learn with you guys. Okay, so we got this high, we got this low right here that I outlined. And we have what looks like, this is the daily chart, right? So we have like this kind of ascending liquidity. We had this pretty sizable impulse up here. So maybe we can tighten this up. Let's actually go down. Okay, yeah, so this is a better time frame to look at. So what I like about this is we had this, this impulse right here, this consolidation, and it led to another impulse. And now we formed some lows, some, relatively equal lows, kind of have this like ascending liquidity going. So I am expecting price to at some point break through these to grab liquidity and land in this demand zone right over here. Now, it's a pretty large demand zone, so hard to say where exactly to put the entry. It really depends on the risk to reward. Here, I have this laid out, so it might make it easier. But what's the target? So always, as a rule of thumb, just the higher high, right? So this would be the high. You could target that. And then the invalidation. Okay, so this isn't terrible then. So invalidation is below this zone. That's probably good. And then I like to shoot for at least 3, but you can do whatever. So if you're doing 3, this right here, which is actually pretty, it's close enough to the top where I think that would be a decent trade. So I think this is a potentially a good trade idea. Price would show some weakness below through these levels right here to grab liquidity, run stops, and then dip into this demand area right here where we saw this original impulse that led to this high. So we come back in here, grab any excess liquidity, capture that, whatever's left over, and then push higher up to, presumably at least this higher high, but maybe even higher. Really depends. But that's what I'd be looking at right now. Got those scribbles. All right. But yeah, so pretty good trade idea. Anything else want to talk about this? That's pretty. Yeah, I feel like that's good, right?
Yep.
All right, moving on. Okay, we got Euro AUD. Now, why do I have this? Okay, so we had this clear lower low formed right here. And we got this level right here. Okay, so let's just identify the structure a little bit. So we got this high, got a low, got a lower high, and we made a lower low here, lower high, lower low. So what are we looking for? A lower high. Now, what are our key levels that we'd be looking for that lower high to, or like where we would find that lower high? So this is a key level right here. We had this high here and kind of dipped down, consolidated, and then another impulse. So this would be area of interest number 1, where we could see price come back into and then dip down for another lower low. Or obviously we could play the actual high somewhere up in here, because if we're not going to make a higher high, continue this bearish structure, remember we are in a downtrend, we're going to continue this bearish structure all the way down here. This is the high, presumably, that we would not trade above. So you could base that off of that. That would be kind of the safer bet, because you're, say you played it off of this one, and price decides to do something like that, and then goes down. That trade idea would still be consistent with the structure, even though you got stopped out. So this isn't, while it could totally bounce off at this level and continue, technically it could bust through that stop and still be consistent with the higher time frame structure headed down. So again, that doesn't mean you shouldn't take it, because oftentimes you do see these kind of like zone shifts where you have the high right here, and then a little drop that leads to a consolidation, and then this ends up being the area of liquidity that acts as the high, or the previous high, off of which price will bounce. So I think both areas should be on your watch list.
Totally.
But let me get rid of this. Actually, let's move this up. So if you wanted to do the safer bet, I guess you could play it off of this one, where you got the invalidation above this actual high, and you're just basing it off of, what is the 4 hour? Maybe drop down to the 1 hour, see what we got. Yeah, so pretty much the same thing. Yeah, so this is it. This is the area right now where we saw this, this consolidation, then this drop down. I still would definitely watch this area right here, just because it was a pretty, it wasn't a small level of consolidation. Like, this is even larger than this one.
That's what she said.
So, yeah, just entry at the bottom of the zone, invalidation above the high, and then you can target a lower low, right? So at least right here, and that's a pretty decent risk to reward. Honestly, you could actually probably play off at this level and still, yeah, so that isn't bad. You could play off like the top of this zone, and still keep that 3 risk to reward with the invalidation at the very top. Not sure if I would do that. But it's not bad, actually. I mean, 3.33 is pretty decent for kind of playing off of both. You could even move it down if you really wanted to get 3. Yeah, so, pick your poison, right? But yeah, that's what I'd be looking for. Some type of retracement into one of this level right here, or into this level right here, and then a continuation of the trend to make a lower low. All right, moving on. Next up, we got, what do we got? We got CAD JPY. Okay, so now this one is pretty nice. I do like this price structure. So we got, we'll go up to the daily real quick, maybe get some more context. So clear uptrend, right? Don't fight it. Don't fight the trend. We're looking for buys, more or less. That's our base case. And we'll drop down to 4 hour first. So we had this low right here, aggressive buying. I mean, look at this huge imbalance potentially to look out for. I don't know. I mean, we already kind of captured some of the liquidity by dipping down into here. So let me get rid of that. So we have this huge impulse higher to make this high. and then we had some ascending liquidity right here. Then we had price dip down, bust these stops, kind of capture some of this liquidity from this impulse, and then we headed up higher to make a new high. So I'm kind of expecting a similar thing to happen where we have this similar structure of this ascending liquidity, whoops, right here, right? And then price to dip down into this level right here, kind of the imbalance or the like where the impulse was that led to that new high off at this level. So somewhere in this region to do the same thing and continue higher up to a new high, right? So that's kind of where this this order is. Let me get rid of all these drawings. So entry around this level. Actually, I think you can probably see it better if you drop down to like a 1 hour chart. Yeah, so you can see this is kind of the imbalance that we need filled. So we had this small impulse up. We had this, I guess, minor consolidation in this area, and then this huge impulse, and we have all this space right here. That's kind of an imbalance in the market that I would assume is going to be filled.
Yep.
All right, so yeah, we're looking for a drop down into this region right here. So stop or entry right around where that imbalance is, so the top area right there, and then stop. You could let's see, where's the target? Oops. Oh my God, dots. So target the high, right? We're gonna make a new high. Well, I should move this down, repurpose this. So this would be the higher high, right? We already are looking like we're tracing a little bit. So this could be the higher high that we're planning to bust if we're going to continue this structure. And what is this? So this is a 3 risk to reward, so pretty decent right now. You could try to leave this as is, actually. Maybe even tighten it up to base it off of this wick right there. But either way, that is what I'm looking for. It's kind of mirrors this price structure right here. Let me get a better view. So we had this big impulse, left a lot of imbalance in the market. We had these lows that were put in, kind of ascending lows to trick retail, and then we busted them, grabbed liquidity to partly fill this imbalance right here, and then we took off to a new higher high. And so I'm expecting a similar thing. We have this consolidation, this impulse that led to the high. We have this similar ascending liquidity, and retail probably has stops that are all lined up at these lows here. So price comes down, busts through them, maybe fills some of this imbalance, captures liquidity from this demand where that impulse started, and then we continue higher up to a new higher high. Right?
Yeah, baby! Yeah.
All right, let's move on to British pound and the yen. Okay. So this is actually very similar to the what did we just go over? CAD JPY, pretty similar price structure. So we had the same thing. So right, we had this consolidation, call it right here, minor consolidation, where we put in that low, strong impulse up to make a high, and then we established these lows with kind of this equal low ascending liquidity structure, and we broke it, dipped into this this demand zone, captured liquidity, filled that imbalance pretty perfectly, and then pushed higher. We didn't make a new high, which is potentially concerning because you want to see this bullish structure continue, but it was similar enough. I actually was in this trade. I closed it earlier today just because I'm not usually a fan of holding positions over the weekend, especially with today's environment with all the interest rate changes and inflation, monetary policy just going wild. So I closed it a couple hours ago, I think, and actually worked out decently well. But basically the idea was the same thing as this, right? So we have this low, this huge impulse came out of here. So this is where a lot of liquidity entered the market, and we came back in. We dipped into this once, and that did make me a little suspicious because we didn't have a crazy reaction. I still put in the order, and we got a pretty decent reaction. But this reversal right now has me a little bit concerned that it maybe doesn't have enough momentum to break for a new high. Now I'm not saying that. Actually, let me get this out of the way. So I'm not saying that it doesn't have it in it to bust through these highs and kind of capture some of this liquidity right here, because there's probably a lot of stops in this area right over here, a lot of liquidity resting there where you maybe want to see price come up here into this area of supply and then continue lower if it was going to head lower. But if we look at the higher time frame trend is up. Now we have this counter trend going, so like higher time frame daily, we are headed higher, but we are in a clear downtrend right here, counter trend. Now it's hard to say where we would bounce. So I think we already kind of at these levels, right? Yeah, I don't think we'll go this low right here. Definitely possible to retest this previous range, right? We already kind of did it once, so I feel like that wouldn't be what we see. I would think that maybe there's some sort of demand or imbalance in here. Although we kind of captured this liquidity, right? So we had this impulse and then we captured it here and then headed higher. So somewhere in this general region, this is a pretty messy zone, to be honest. It's pretty big, and we're already kind of in there. So I wouldn't say I have a lot of confidence in this. It's kind of, like I said, it's a messy price action. But still, I think this zone is a potential area to watch. If we get below this zone, especially if we get below this zone, I would definitely be considering doing some more counter trend trades to the downside, maybe back up until this level right here. But yeah, so in the meantime, I guess I would just stay steady.
Yep.
All right, enough about DJ. Who gives a shit? Let's transition. AUD, USD. What we got here? So start with the daily. Okay, so this is pretty basic. We got a high, we got a low, got a lower high, a lower low, a lower high, and we're kind of in the middle of whatever the hell is happening right here. So given the structure right now, we can assume that we're going to make a lower low, right? Now, we never really touched this level fully, right? Because this is kind of the area of liquidity that I was originally assuming we would head into. I had orders that never got filled, or an order that never got filled. That was right here because we just bounced right off of this level. Now, I think I mentioned this in a previous video that this definitely could have been the high, and we're headed lower to make a lower low. But so right now we're kind of in like no man's land in terms of really basing it off of structure, because we're like right in the middle, right? So we got this high, we got this low. You can base it off of this. We're kind of in like the midpoint right here. So hard to say what I would do. I did have this level mapped out just because, again, kind of similar to let's actually get done in the 4 hour. So kind of similar to some of the other ones we were talking about. So we have this area of demand, right? So we had this, we even put it down right there. So we pushed up, we had a minor consolidation, and then an impulse higher that led to this high up here. Let me get the pen out. Okay, can you get the fuck out of here?
And we say bye-bye.
Okay, so we had this high right here, right? That we made off of this impulse, and we had some lows established here that are relatively equal, right? That's why I had this blue line here, and we had hit them again. So I wouldn't be surprised if we bust through there, especially the way it's lined up with this demand zone right below that we haven't dipped into yet, right? So I would be expecting price to come back into this level, potentially to make a new high and actually get into this level of supply before we head lower. So this would be a counter trend trade because obviously we are in a higher time frame downtrend. But if this level doesn't hold right here, I definitely would be expecting it to make a lower low and really trade below that. But I still would be looking out for this level. So basically, just exactly like this order panel. I never know what to call these things. Order panel, this order visual right here. Target a new high. You could also target the zone, but they're so close, I would just do the high just in case. And the risk to reward is still fine. And you could actually even tighten this up, because if you're basing it off of this level right here, you could really just put it like that and maybe even put this a little higher. So yeah, 4 hour trade, pretty decent. And again, counter trend trade, because I do think that we're headed lower. I mean, you have to keep in mind this is a dollar pair. So dollar strength means that the Aussie dollar is probably not going to, in relative terms, outperform in the long term. But we have seen a pretty strong move up in the dollar, at least relative to the euro, specifically with the dollar index. So I wouldn't be surprised if we see at least some consolidation or retracement in the dollar that gives pairs like the Aussie dollar or currencies like the Aussie dollar time to get some short-term strength leading up into the supply before we head lower. Right?
Yep.
All right, let's transition to the next pair. What do we got? NZD JPY. Okay, again, kind of similar price structure to a lot of the pairs that I've been going over today, where we have, so we had this range, right? We dip below, strong impulse that made this high right here, and we had this pullback. So this first initial high, this pullback that led to this kind of demand zone right here, because we had another impulse higher, and you can tell, what is this, the 4 hour, right? Okay, so you can tell that we have a little bit of this imbalance right here, right? That you would think maybe the market wants to fill. And we also have this kind of relatively equal lows, this kind of ascending liquidity, and we're already kind of busting through that. So I wouldn't be surprised if we continue that and get the fuck out of here and push into this level to capture some of that liquidity, and then push higher to a new high. So I got this lined up right here. Actually, let me look at that. Yeah, so we're in kind of a, definitely uptrend in the longer term.
Obviously.
So this is our higher high, technically, that we'd probably be looking to break. Also, obviously, you could base it off of this one. That is where this order is really, that's where the target kind of is. Really depends on what you think, or what suits you, because lower time frame, this is definitely the level to watch out for. I wouldn't be surprised even if we did end up reaching this level, if you see some sort of retracement, like a little pullback and then a continuation. So you can target this one. The risk to reward's fine, so I'd probably stick to the closer target. But this is kind of the real higher high, higher time frame higher high that we'd be looking to break to continue the structure. Make a new higher high, then a pullback to a higher low, and then continuation, etc. But as you can see, this is really similar to a lot of the ones that I've already talked about today, where you have this impulse, a demand level or demand zone created, like a lot of liquidity or impulse higher, and then we have this like ascending liquidity, and so price, which is already kind of doing it right now, breaks through that to grab all the liquidity, all the the stop losses, retail stop losses placed around this level. It busts through that, pulls liquidity also from this demand level, and then shoots higher.
Nice.
So this is what I'm looking at for NZD JPY.
My man.
All right, let's transition to our final pair. What is this? USD Swiss franc. Okay, so kind of not clear. We have this uptrend. Clearly, you can kind of map this out with a little bit of a trend line, right?
Come on, man.
So clearly in an uptrend, had this huge spike, and now we're in this counter trend. Now, I wouldn't be surprised if this is the low, and we are going to be headed higher now to make a higher time frame, higher high. So this is the level, or even like really up there. So this is the higher high, right? That would definitely be, this is a ways away, so I'm not going to get there anytime soon, probably. No! But that is what we'd be looking at. You could also, let's just map out all these higher highs, because these are the targets, right? Basically, right? Because if we enter into this level right here, this like liquidity area, liquidity zone, and start showing some weakness, that could be a sign that we are headed to make a lower low, right? Bust through here, then retrace, and then continue. And now keep in mind, this is a dollar pair, so if you do think that the dollar is going to continue higher, the Swiss franc is usually, like historically, a safe haven currency, kind of similar to the dollar. Definitely not to the same extent, but you just have to keep that in mind when you're talking about relative trades, because if you're doing a USD euro trade, obviously, the likelihood of it, the euro losing relative to the dollar is, I would say, higher, especially given current circumstances. But the Swiss franc may get more of a bid as a quasi safe haven currency in Europe.
Whoa.
So hard to say if you would see that much strength, in this specific pair. But still, in relative terms, I think the dollar probably has a better chance of appreciating in relative terms. So we already kind of pulled liquidity from this area. Let's drop down to the hourly chart. Yeah, so kind of a similar thing. This is a kind of the pattern of the day, right? So we had this zone right here, left in balance because of this impulse. You can see we have clear imbalance here from this level up until there. A lot of imbalance, and it kind of filled it right here. But what I like about this I mean, it's too late now, but still kind of just reaffirms this idea that we've been talking about. So you had these relatively equal levels, right? And this is, you can call it retail liquidity. So you have, these lows where retail places stops. They get confident. They're like, oh, it's making higher lows. Put my stop here, wait for the higher high, up here or something. And what does price do? It busts through all these levels, grab liquidity, dips into this demand zone, and then continues higher to eventually make that higher high retail was looking for.
Little bitch.
And so this is, like I said, the pattern of the day. Definitely burn this in your memory.
Right.
Because this is a pattern you will see a lot. You got to view it from a higher time frame perspective, because you can get caught up in looking at all these lower time frame demand zones, which you can definitely trade. I mean, if you see this, like this right here, so you can say, oh, this is a clear demand zone right here, because we made a low and we had this huge impulse and left a lot of imbalance in this area. What did price do? It came back in, didn't make a lower low, it made a higher low based off of this demand level, and then it didn't make a higher high, and that's kind of the problem, because that can trap retail. They're like waiting for this higher high, or maybe even price just to get up in this general region, and that doesn't happen, and then it just busts through all their stops and grabs liquidity from this higher time frame demand level and then continues higher, right?
Totally.
All right, well, I think that's all I have for you today. I know. But as always, stay happy, humble, and most importantly, solvent. And I'll catch you all next week.
And we say bye-bye.